welcome to the closing beat, everybody. Happy Wednesday. Hope you're having a great day today. The date is wrong. Just noticed that. Sorry about that. We'll fix it next time. Hey, we're financial advisors here with JazzWealth, and this is our attempt to try to do a market update show for you. Give you a tip today. Are you one of those people who said 2019, I'm going to invest for retirement. I'm going to get on track. I'm going to play catch up. I'm going to get started for the first time ever. I'm going to get somebody to help me, and you haven't yet? Your tip of the day is when you get started, if you have not started already, you can go back in time for 2018 and contribute for 2018. A lot of people miss that. If you're getting started this year, up until tax day, you can go back in time and make those contributions. So step one, you go to jazzwealth.com, you open your account, right? Shameless plug. Step two, you either bug me, I will bug you, or you make your contribution for 2018. When can you go back in time? This is like a rare opportunity to do it, so I've been pointing that out more and more to everybody. Take advantage of it while you can. Anyways, this is our market update. Obviously, we're financial advisors here, and the markets today we're going to cover. Off to your right, you see the performance of the overall markets. Basically a 0.5% on the Dow, S&P 500, 8 points, and the Nasdaq 5 points. You see the difference there? You see how they didn't all move together today? What gives? Well, we're going to cover all of that. Also on the bottom, you see the 5-minute chart, which represents every 5 minutes, of course, in the day. It shows you what happened. You notice more volatility throughout the day. Actually, if you look above, when that comes up, you'll be able to see that the volatility, or VIX, I believe is how we have it posted above, was positive for the day. Markets were higher, VIX was higher. That's not normally the case. You've got more intraday volatility. We'll try to cover that as we roll on here. But that's basically what the markets have done today, so you get a quick look at that. Let's take a look at the markets on the charts. You've got the S&P 500 still trying to do battle with this area. We call it no man's land right now. I put a little gray box on there just to show you. We poked our heads out of no man's land today, and then people went, whoa. Why were we higher yesterday? We had some news out of the White House. That's not financial in nature. I mean, it's good news, but that doesn't help us change our metrics at all to see what the appropriate valuation of the market is. So today the market starts moving higher and people go, wait, like what was said yesterday is not necessarily true today. Trump said, maybe, sort of, and now you've got the other side going, maybe, sort of. So turned out not to be as exciting. The markets didn't know what to do with that. So I think that's part of the reason you saw more intraday volatility as stocks just responded to their individual news events. You also had some Fed data come out today that most of the economy obviously looks good. Commercial lending, real estate lending, private lending. Oh, but the auto loan defaults are on the rise. So apparently people who are severely behind on their auto loan payments, that number's creeping higher. So that was the one negative spot everybody focused on. You saw a little blip in the market down when this morning when they were focused on that. Other than that, the S&P 500, in my opinion, still has more proving to do before getting out of no man's land. And if you're one of our customers in the dojo, you have the candlesticks class. This candlestick today tells you a story. It's not an opinion. It tells you exactly what people were thinking in the markets today. If you have no idea what you're looking at, then be sure to check out that video. It's in the dojo for you. Here's the Nasdaq, right smack up against the 200-day moving average. You can see it there. That's the red line on your screen. That's what everybody's talking about. 200-day moving average. What's going to happen? Whether it's the Nasdaq, the S&P 500, the markets in general, the indices in general, or individual sectors. So that's what the Nasdaq looks like. We'll cover the sectors in a second. The Dow just above the 200-day moving average and holding. So we would use that term to say that it is holding the 200-day moving average because it tried to go below it. Couldn't do it. Popped back up. So looking pretty good there. I've been covering the Russell a little bit more only because that one is it's sort of got a mind of its own at the moment, but it is plugging its way towards the 200-day as well. More and more of the sectors or market indices are starting to make their way towards that. So I just pointed out. Okay, that's the index as far as, that kind of overview. Let's go down to the sectors. So taking a look at the market sectors or areas of the market that are sort of interesting. You got oil higher today, added about 1.5% on the day. Oil inventories came out. There was an increase in the number of U.S. barrels sitting here ready to be used, 3.6 million barrels to be exact. But nobody cared. Everybody's like, yo, Saudi Arabia, are you really going to cut back to those 9.8 million barrels a day that you said in March? And so far, the answer is yes. So with that in mind, people are valuing oil at a little bit higher because of supply. Supply should be dropping a little bit. Now, If the U.S. keeps cranking out millions and millions of barrels and the Saudi Arabia starts cutting, granted we're nowhere near in competition at the moment, that's going to have a little bit of impact there. We'll cover it as it comes. But for now, know that oil was higher because out of the OPEC group, Saudi Arabia says in March we're going to slow down production more than what we were expecting. We covered that yesterday. So that's that one. Consumer discretionary, I'll use XLY. Is that the best one for today? Let's use XLY. So that was a little bit higher, also getting above the 200-day moving average. Again, that's the red line there on the charts. Home Depot, we own this one in our dividend portfolio. Home Depot is about a 1.7, 1.8% allocation in our dividend fund. But if I go back to XLY, you got to know these numbers. If I go back to the XLY, it's about 10% of the consumer discretionary space, or the ETF if you want to follow along. So when you go, hey, why was consumer discretionary higher today? Well, Home Depot plays a big role in that one there. So show it one more time. The symbol is HD, up about 1.5%. Didn't really look up the news or anything. I just like to sort of see which ones are the leaders in the group. Transports, IYT, I'll use that. That's one of the more popular ones. Transports also getting back up to their 200-day moving average. I'm just trying to say it over and over again so that you know when you hear it, it's not new, right? Everybody's focused on the same things right now, and the 200-day moving average is most definitely one of them. I wanted to point out retail. If you have retail stocks or you're heavy in the retail space, I know it's kind of rare, not a lot of people do that, but this base right here, from a technical perspective, people that like to use charts, they see that consolidation, they go, wait a minute, retail hasn't done anything all year long. Count back. Let's go all the way here. Here's the beginning of the year, basically. You had a little bit of a push off of the December lows, and it's been moving sideways up near the highs ever since then. I thought it was kind of interesting today because this one started off by selling off this morning. It was really weak to start the day. If you really want to geek out, I don't know if you guys like this stuff, but if you really want to geek out, here's the start of the day, a 5-minute chart, just like we show on the other screen. To start the day, it did nothing but sell off. And then everybody went to lunch, and for some reason, retail decided, hey, let's get things going again, and finished back where it started. So this view here, weakness in the morning, strength in the evening, afternoon, that pulls this daily candlestick little chart there, or candlestick. So not that you really probably focus on the day by day, but if you look at something like that, you go, wait, that grabs my attention. Why were we weak and then we were strong? The bulls, the technical traders will look at this and go, uh-oh, we're going to break out. This is the next sector to move up to the 200-day moving average. I, of course, can't give you my opinion, but based on that candlestick pattern, I can tell you what other people are going to be thinking. So we'll keep track of it. We'll see what happens. All right, how'd I do? So that's the market index. That is, the indices. It is the sectors, sort of everything I wanted to cover today. Should we do stocks? Do we have time? Oh, we got time. Come on. This is what we do here. Let's look. Okay. So if I dig in here, a couple names. I'll go briefly through these. Hilton, you had this one, about 7% on the day, broke above the 200-day moving average. They reported 79 cents of earnings. We expected 69 cents of earnings to be exact. I have a little cheat thing down here. 79 versus 69, so came in better than expected. Revenue was better than expected. I really just like that it broke back above the 200-day moving average. First time in, 4 months that it's been able to do that. That'll grab some attention. If you look at some of the other hotel companies, Marriott got a 3.5% boost on that. That's one of our smaller positions. Oops, there we go. We do own that one. That's a really small position, so it doesn't really move the needle. But hey, a positive day is a positive day, I guess. Dish Network's lower today. They reported earnings less than expected. Didn't matter. Everybody was focused on the number of subscribers. So I wrote that down, number of subscribers. They had a net loss of 334,000 subscribers. Boy, that'd be nice, huh? Can you imagine having 334,000 subscribers on on this YouTube channel? And now you don't have to pay anything. These people pay for this stuff. It's incredible. So they ended the year with 12.32 million subscribers. That's a bit of a disappointment, so the stock was lower on the day. Learn to type, brother. Activision, ATVI is the symbol. The stock was actually higher, 7% today. Remember the other day we said Bloomberg was sort of hinting at a rumor that they were going to lay off some of their workforce? Well, the company reported earnings and they announced they are going to cut 8% of their workforce. So good for Bloomberg, finally reporting something that turned out to be true. I don't mean to pick on Bloomberg, but they didn't have the best track record here lately. Here's the thing with ATVI, if you're following along or you're interested. They're laying off part of their workforce because they're spending a ton of money to increase the number of developers that they have to pump out more games. So they're increasing developers by 20%, cutting down some of the other, I don't want to say fat, but trimming some of the fat in the business by 8%. I think it's a good thing overall. So I don't know if everybody else thinks that, but the stock was higher today. So there you go. Maybe that's a good thing. All right, back to the charts here. Just a couple things here. You got Cisco reporting earnings after hours here. Earnings higher than expected, revenue higher than expected. There's some numbers everybody's focused on here. Platform infrastructure revenues, they're higher by 6%. And of course, there's security revenues. That's a big one for them. That was up 18%. So it seems like that's good for them. That just seems to be the focus. Stocks higher. It's back to highs basically. So Cisco looking to start tomorrow right about at these highs. That's pretty good. Here's a couple interesting things. Can I point this out real quick? You got Washington sort of fighting about share buybacks. Well, today, and this is all I could write down. I mean, there's probably more than this. Well, first of all, dividend higher on Cisco up to 35 cents. Cisco says we're going to increase our share buyback by $15 billion. Take that, Washington. What do you think? Yelp just reported earnings here a little bit ago. $250 million increase to their share buyback. AIG just reported earnings a little bit ago. They're doing $2 billion additional to their buybacks. You see how quick corporate America responds? Hey, Washington's going to make a big deal out of us buying back our shares. We'll just do it now. We'll just get it out of the way before these guys bicker. It'll take them months, if not years, to work something out. Probably going to be an election debate, right? So we know that's a ways away. Look at all these companies moving so quick. I applaud corporate America for doing that. You can disagree with me, but hey, they are going to do what they're going to do. Let's move on before somebody gets mad. Amazon and General Motors are going to invest in Tesla's rival, Rivian. Is it Rivian? Yeah, Rivian was the one. That's it. Nothing else to say there. TripAdvisor was down a little bit today. The focus on the earnings, like they missed on earnings, missed on earnings, beat on revenue. The focus is on this one is always on the number of unique users. It's great that if you use TripAdvisor, you go back to it. Cool. How many new people can you get? That's the real thing there. Like with Netflix, how many new subscribers did they get? It's always a focus on earnings. With TripAdvisor, the number of unique users is something to focus on. That number was higher. However, the number of unique hotel shoppers, the people that use it to get a hotel, that was down by 11%, and that seemed to be the focus for everybody today. So the stock lost about 5%. Grand scheme of things, it's not really that big of a deal. Groupon lower on the day. They missed on earnings, beat on revenue. Customer base, same thing, right? This is one of these sort of participation companies. I hate to say it that way, but if we get more participation, it generates more revenues. Overall, their customer base fell by 2.5%, and so that's going to have an effect on the bottom line eventually, if not now. Revenue came in higher, but you get what I'm saying. So the stock was lower by 11%. Seems like maybe they deserved it. Alphabet, not really anything interesting here. They're going to spend $13 billion this year. Like a company is going to spend $13 billion this year on expanding in the U.S. Data centers and expansion in their real estate portfolio in Nevada, Ohio, Texas, and Nebraska. So if you live in one of those areas, Google is either expanding or coming for your area there. Equifax didn't really budge much today. Turns out the data that was stolen from them, all of our data, by the way, they don't know where it went, right? So they can't find it. It's gone forever. They don't know who has it at this point. They're using the whole spy thing like they said before. And this goes to a video that I did just 2 weeks ago. Why do you want to do a credit freeze and not a credit lock, right? So another bit of financial advice for you. I can't link the video since this is live. Just go back and look why credit freeze versus credit lock. There's a huge difference there actually, and this, what we found out today, is even more of a reason for you to do a credit freeze, not a credit lock. Don't fall for it. Don't you do that. Nope, that's not it. Mattel, there we go. Boy, we talk about the one that got away, right? Mattel, another 3%, 37% in just the last 5 days. Oh, man, we were talking about this one after earnings. I just didn't look back, to be honest with you. Hey, Micron, I'm just out of it here today. Micron up 3% today. I got an email, somebody said thanks for the recommendation. None of these are recommendations. Please, just like if you want the show to continue, I'm not making recommendations. I'm just pointing out things that I see. What you do with it is up to you. Please make sure that anything you do, although it looks like this is going well, make sure that any things that you do because of what you saw here are suitable for you. And of course, you're taking the right amount of risk and you're focused on all of that. I'm not telling you to go buy or sell something, so please don't get me in trouble, okay? Can't afford it. All right, so that's basically it. If you have any questions, I'm happy to answer here. I think I pretty much covered it, actually. Cool. Oh, Heather's learning. I love it. Welcome, welcome. Yep, definitely be here. Google's coming to Vegas. Yep, I saw their little plans there. That's cool. I wonder how much of that, by the way, is going to be in that autonomous vehicle. I forget what it's called at the moment. I think they're still working on that. I know they sort of downplay it, but I don't know. I haven't looked that up in a while. Cool. Tomorrow, Avon reporting earnings, the CME Group, DGX, Coca-Cola, Vulcan, Waste Management, Applied Materials, AMAT, it's a symbol on that one, we'll be looking at that. CBS and NVIDIA all reporting earnings tomorrow. We'll focus in on those for sure. And Google, little headline coming through, they're reportedly working on more affordable smartphone options. Okay. All right, so ATO, by the way, is replacing Newfield, NFX, in the S&P 500. So if you're an index investor and you like sort of participating directly in the index, starting on Friday, Newfield's going to take over for Atmos Energy. I don't know why, I just happened to take a look at that. Okay, that's all I have for you. I won't take any more of your time. Thanks for watching. I really appreciate it. And remember, if you're going to get started investing for retirement, I hope you'll think of us. But either way, go and contribute for the previous year. Play catch up for years past while it's still allowed. If you need help with that, well, then you absolutely know where to find us. The shirt says it every day, right there. Just says what you need to do. And we will talk to you guys soon. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose JazzWealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.